Abhneesh Roy, Executive Director, Research, Nuvama Institutional Equities, joins us. We're also speaking with Jayen Mehta, MD of Amul. Mr. Mehta, Abhneesh, absolute pleasure to have you here. Mr. Mehta, let me start with your take and the kind of trends you are seeing, because your visibility on rural consumption versus urban consumption, I think, would be unmatched by any of the listed players, considering the spread of Amul. So let's start by getting your take on whether you think there is a consumption problem right now.
I would disagree with that, because being in milk and dairy, which is a very essential food item, and the range of milk products that we have, and particularly during this Diwali season, we've seen a very, very good traction. In fact, the October month, which just passed, was our best ever month in the history of the 50-year-old organization. And a growth of more high double digits over the previous festive season. So I can vouch that there is a huge appetite for milk products and the ghees and the mithais across the length and breadth of the country. And there is actually a big spike in demand, actually, of many of the product categories, which we thought were conventional and traditional dairy products. But you can see the demand coming up across the length and breadth of the country, urban, rural, and all that stuff.
Hear that, Mr. Mehta, and of course you've been growing at that consistent pace of 15 to 18% now over the past decade. But Abhneesh as well joins in with a quick overview on the industry. Abhneesh, hi, it's Amina. We've talked about this often in the last 6 to 8 months, the urban versus rural demand. Urban demand now seems to be under pressure while rural recovery is showing some resilience. What factors do you think are driving this urban-rural divide, and how sustainable is rural growth over the next couple of quarters or in the second half of this financial year?
Yeah, thanks. So we'll be more positive on rural consumption from the next few quarters perspective and next 1 to 2 years perspective. We are seeing gradual rural recovery. If you see FMCG sector, the per capita consumption in the rural area is 1/3 of the urban. So generally, rural grows faster. Last 2 years, because of various issues, that had got derailed. But now, if you see, because of very high stimulus programs, both by the central government and almost every state, we are seeing that clearly disposable income is improving. We have also seen the exports of the agri, which was curtailed. For example, onion exports was curtailed. And those have been liberalized across many crops. MSP hikes have been good. NREGS also, if you see, the job data is declining now for many months. That's a good proxy to understand that the rural guy is getting a better job. Urban, clearly there is a problem. I will say that if you see this quarter results, almost every company has spoken about urban slowdown. We have in fact seen retail, QSR, footwear companies have seen urban slowdown now for 7 quarters. For FMCG, it started this quarter. My sense is FMCG companies also will suffer a urban slowdown for the next 2 quarters. The issues, there are 2 issues. One is, of course, food inflation is very high. Second, of course, if you see the EMIs, the interest rate cuts have still not happened. So I think once those things happen, we will see recovery in urban. But in the near term, clearly, rural should grow almost twice of urban for most categories in FMCG and for most companies also.
Mr. Jayesh Mehta, please come in on this one. And you did say that growth is extremely healthy for you and you're on point to achieve that 60,000 crores of target that you've set out. You're growing at 15 to 18% over the last decade. What I want to understand from you is, how is the current consumption patterns different between rural and urban markets for your product offering?
We are a very different set of an organization, because rural is home for us. So all the milk that we get is coming from the 3.6 million farmers across 18,600 villages of Gujarat and more than 20,000 outside Gujarat. So that's where if you as consumers spend 100 rupees on milk or Amul products, 80-85% goes back to the farmers right there in the villages. So actually, and milk is the largest agricultural crop of India. So actually, we are a surrogate of the growth of the rural economy. And if the rural economy grows, it's obviously a good indication that the dairy industry is also doing pretty well. Having said that, we also distributing our products deep into the rural areas with a clear focus on expanding our retail universe, our direct distribution coverage, and so on. So that contributes to almost 40% of our total turnover, and it's growing very well. In fact, if for the number of distributors that we have added has increased by 40% in just last 2 years in the population town less than 10,000. So as an organization, we are strongly focused on all the aspects of distribution, be it rural, be it urban, and the small portion packs and the variety of products that we have help us gain a stronger rural foothold also. We also service back to our farmers in areas where we are procuring milk. And of course, urban is a big focus area
Got it.
for us. New
Mr.
product category.
Mr. Mehta, good morning. Neeraj, the question really may not be as much about whether Amul is able to withstand any kind of consumption slowdown, because you would. I think the point that Abhneesh was making as well, that there is, in the commentary from a lot of companies, for a Nestle to come out and say that the middle class has just gone absent. Just trying to understand from you, not from an Amul MD perspective, but from an overall perspective. Is there pain in the system, sir? You may not see it in your sales, but do you see it in the consumers, in the markets that you're serving in? Is there pain in consumption?
In a way, I mean, I cannot comment on how other companies
Agreed.
look at
Leave an individual company out, sir. But just broadly,
Yeah.
do you see pain?
But see, what we have seen happening very, very clearly is that retailer is very clear of what he's stocking, and his interest depends on the interest of the companies also in their business. Okay, so it's a two-way street. All this while, it was just one way that we as organizations used to go to distributors and to tell them the stocks to the retailers. The market has changed, the market scenario has changed. So every company has to evolve as per that and also understand the aspirations of the small retailers, of the large retailers, the modern format stores, UCOM, ECOM, and in our case, we also have our own set of 10,000 Amul parlors. So this is a very tightrope balancing the conventional style of distribution, which the large companies used to do historically, is perhaps not the way forward. So that's the pain. I think you as market observers are looking at it. But we, as being a part of the industry, know very clearly that unless the organizations change, the consumer is always evolving. There are certain products which are never going to go out of anybody's consumption basket. So we cannot say consumers are missing. They are very much there and consuming more and more. How we as brands, how we as organizations adapt to this change is a call which is internal actually. But the market is very much there. Consumers are very much there. We have such a large middle class population base. We have such a large youth base. I mean, there's no country in the world, there are more than 75 crore people who are less than 25 years of age. So we should be lucky that we are
About it,
feeling...
Mr. Mehta. No doubt about it. I mean, the size of our population and the inherent strength of our economy is there. We're just trying to understand whether there is a bit of a chill right now with more premiumization getting focus or not. And I see you nodding there. So you're saying that's not something that you are seeing at all.
No, not at all. Not at all. Because every companies look at it from their own lens.
Yes.
And if I'm asked to look at the general lens of the market, there is continuous growth in the demand of all the different product categories that we have.
Okay, Abhneesh.
And the economy is also doing good. So we don't have a reason to complain. I mean, even if you look globally and
No, so
Indian...
we are basing this on commentary from some of the largest listed FMCG companies. What they are saying, what their numbers are saying. We're basing this on quarterly results and what their commentary is, what their balance sheets are looking like. One commentary which is coming in, and Abhneesh, I want to come to you on that, is the impact of e-commerce. A lot of companies coming and talking about the impact of e-commerce on their distribution is also, of course, impacting some retailers. Do you see that as one factor which perhaps we've not taken into account, that there is consumption, just the channels are changing?
Yeah, channels are definitely changing. I think in the larger cities already e-commerce plus quick commerce plus modern trade is now bigger than the Kirana. Kirana clearly is struggling, and companies definitely, as the other member also highlighted, they need to have a very good balance of all the different channels. But coming back to demand side, I don't think the outlook is as bad as the initial Q2 commentary. See, initially Q2, what happened was all the results which could be bad came together. So you saw Dabur, Nestle, DMart, etc., all coming out. And after that, if you see, all the results were decent. So it is not that everyone is seeing bad demand. If you see, Colgate, in fact, saw 8% volume growth. Even for Unilever, the oral care business was high single-digit growth. So oral care, everyone is doing well. Even Dabur saw good growth there. Similarly, Bikaji 15% growth, Marico 5% volume growth, GCPL 7%. Outlook is better. If you see in H2, our sense is the election kind of impact in Q1 or the heat wave impact in Q1. In Q2, there was an impact of monsoon, definitely. Yes, there is some level of urban slowdown for sure. But my sense is it is not that it is gloom and doom, and H2 should be 2 to 3% pricing growth for most companies, most categories, because we are seeing very sharp inflation in palm oil, tea, etc. So companies will take that. So net outlook is better. Things are not as bad, but there is a urban slowdown for sure, which is there because of food inflation and because of very high EMI, because of the high interest rate. Once the interest rate cut cycle happens in the coming months, I think that will be a positive.
Thank you, Abhneesh. It's always good getting perspective from you on this sector. And Mr. Mehta, congratulations. It's looking good for Amul. It has for the last 10 years. And I hope for your sake and the company that it continues to look good for the company.